with more of a personal flair, more of a personal, like a needs and leads like we did yesterday, and some other topics that we'll cover in more of a relaxed format where all the members, it's going to be a Zoom meeting where all the members have a chance to chat. So from there, I am going to take it over, bring you over to Brian Hare, who's going to moderate and introduce our panelists. Thanks, guys.
All right, well, good afternoon, all EO Detroit members and all EO Detroit staff that have joined the seminar this afternoon. We appreciate it. As we get in, I thought I would lay out how we designed this. We didn't design this to be really polished. We put this together really fast. The panelists and I and my partner Matt over the past 24 hours. The goal was to try to get a lot of information out that we know is important to you guys in a quick fashion, and then spend a lot of our time with question and answer, because our opinion right now is we believe the members are pretty well read and just have a lot of questions and need a lot of guidance. So we're gonna go through a presentation first, actually a couple presentations, and then we're gonna do a lot of question and answer after that. I want to thank everybody for attending, and I am hoping everybody can see my screen. And before we get going, I want to acknowledge all of our strategic alliance partners: D-Business, Stroya Securities, JFE Law, Sage Solutions, Fenner Malstrom Dueling, Sandler Training Farming Group, Midwest Expertise, and EOS implementer, Dwayne Marshall. And then I also want to thank Joe from Citizens Bank joining us today, as well as my partner Matt Matuzak that helped put this together with the presenters. And so before we get going, I also want to give a disclaimer that we're putting out on everything, that this information is available. You know, what we have now is changing. And it's open to interpretation. So we're going to try to deliver content that we believe is factual today, though it could be changing right now or being reinterpreted as we are talking. So we're going to encourage all of our members to reach out to your bank, reach out to your CPAs, reach out to your legal counsel, do more reading on additional insights and updates. So before we get going, I would like, and I want to thank all the panelists for joining us. Thank you very much. We all appreciate it. So I'd like everybody to quickly go around. I'm going to run through our list, and then each one of you, can you take a couple of minutes and introduce yourself? Tell us a little bit about yourself, and you know, maybe a minute on your organization and what you do for our members. So we've got Dan from Fenner Malstrom, Aaron from JFE Law, Marco from JFE Law, Sherry from Sage Solutions, Joseph from Citizens Bank, and then myself. So why don't we start with Dan, and if you can spend a minute and just introduce yourself, please.
Good afternoon, everyone. This is Dan Patterson. I'm a certified public accountant with Fenner Malstrom, a partner with Fenner Malstrom and Dueling. Our office, we are located in downtown Birmingham. We are a full service CPA and business advisory services firm. A strategic alliance partner now into our second year, and I've really enjoyed this relationship. And we specialize in dealing with entrepreneurial, privately held business owners. So I kind of feel like up until today or tomorrow, we've been on the front line of this new CARES Act. And I'm more than happy to start handing this over to the bankers. I'm worn out, quite honestly. We'll give as much as we can to you, but I'm ready to dole it off to the bankers, and then we can get back to kind of worrying about tax matters. Thanks, Brian.
You're welcome. How about Aaron?
Hi, good afternoon, everyone. Aaron Sherbin. I'm a tax attorney with the law firm of Jaffe, Ray, Hewer, Weiss, and I head up our estate planning and wealth transfer practice group. We are a full-service law firm of over 100 attorneys. One of our practice groups, in fact, includes expertise with Sba loans, which I know we're going to get into quite in depth today. And my practice, I mainly work with entrepreneurs and business owners of closely held companies advising them on all things tax and business related. Thanks.
Aaron, can you do me a favor and maybe just turn your microphone or your speaker up just a little bit? Your sound was a little low.
Okay.
Okay, how about Marco?
Hi, good afternoon. My name is Marco Ballet. I'm also with the Jaffe Law Firm. I'm the head of the tax group, and my own practice is pretty broad in terms of all types of federal income tax, partnership, international, corporate, and some individual.
Thank you very much. And Sherry?
Hi, my name is Sherry McDaniel, and I'm from Sage Solutions Group. We provide human resource consulting to various size businesses, primarily focusing on the small to medium-sized businesses where they may not have a dedicated HR individual, or that individual might be of a manager level. We can provide services that range from simply processing payroll all the way up to assisting with analyzing your workplace, determining what sort of strategic plans should you put in place, what sort of structures should you have for something like this, a layoff, preparing for pandemics from a overall safety standpoint. So we've got a lot to offer various businesses as it relates to human resources. It's a partnership with any business that we align with, and we work with them to determine what their needs are and supply them for them.
Thank you very much, Sherry. And Joseph? Did we lose Joe?
He's got to unmute himself.
Mute now.
All right.
Can you hear me?
Yes, we can.
So the last part was so insightful. I don't know if I can revisit that, but so I'm Joe Bonnell. I'm in the business banking group at Citizens Bank in Southfield, downstairs on the 19th floor, downstairs from the Jaffe offices. I work in the segment of the business, which is 50 million and under in revenue. Under 200 employees is really our segment. So depending how you stack it, some banks business banking group or small business group, some banks lower middle market group. So our group is pretty active and pretty acutely following the PPP program. So this is essentially what appears to going to be our job for the next 90 days or so.
Okay, thank you. And then Anna, did you get my text message a second ago about a message from Bob?
Go ahead and you can announce that, Brian.
Yes, I'm not exactly sure what it meant. Can you?
Okay, yeah, I'm sorry. Okay, so
Sorry, Bob.
Right. So we just want to remind everybody that, you know, along with our chat, that we'd like for you to post your questions on the Zoom webinar chat so that we can answer those at the end. Our experts can answer those. Please go ahead, register. If you're registered, and I hope if you're not, please register for the EO Bridges Slack channel. So it's the Slack app, EO Bridges, and we have a page. It's #ChapterDetroit. All EO Detroit members should have received an invitation from Ronnie Crowley to join. The accelerators also have that as an opportunity to join as EOA Detroit or EOA. So that is just a good way to chat amongst yourselves while you're on this. Just kind of, it's something that the Slack channel is something that I've really come to like. Lots of good information, lots of good ideas sharing, and I know Bob and Linda Gerard are huge fans as well. So just something to consider while we're also doing this.
Thank you. Okay, as we get going, I want to remind all of our participants to submit your questions early. We've got people that are going to try to triage the questions, address. We're going to try to get through all of them, but as soon as you get the questions please enter them and we'll grab onto them and start organizing them. So with that, I'm going to turn the first part of this over to Dan Patterson.
Excuse me, Brian. It looks like, again, another disclaimer. I'm new to the webinar thing, so looks like a better area, guys. Instead of having the chat, instead of going to the Zoom webinar chat, the better area is to actually pose your questions in the Q&A. So if Matt can see that too, it looks like it's just a much better space to post your questions. If you can get from Matt Matuzak that he's able to see that. Brian?
So I'm gonna turn over the presentation right now to Dan, and Dan's gonna talk about some of the items within the CARES Act that are not related to the Paycheck Protection Program. So Dan, I'm gonna turn it over to you, and then I'll work on the tech right now really quick with Matt.
All right. Thank you, Brian.
You're welcome.
All right. Well, good afternoon, everybody. And as most of you have heard, last Friday, Congress passed and President Trump signed into law the H.R. 748 CARES Act, commonly known as the CARES Act. It is the single largest piece of legislation that's ever been enacted by the government. And if anybody wants to take a look at it, print it out, there it is. My version's a little dog-eared and highlighted, but it's a monster, let's just say that. Very, very wide sweeping piece of legislation, but the top priority right now for most entrepreneurial business owners, and that's been all consuming for me, my firm, and all CPAs around town, is what's referred to as the PPP loan program, the PPP loan program, the Paycheck Protection Program. We've got several slides on that, and so I'll table that for now and just kind of cover some of the other individual and business related provisions of the Act. Again, they are wide sweeping. Some of them involve propping up the state unemployment roles and funds. We will kind of let Sherry address that a little bit in her presentation. And I'll hit some of the high points of the CARES Act with, hopefully with Aaron and Marco's input, would be really appreciated on that. So let's start real quickly with some individual relief provisions of the CARES Act. And the number one that you'll see all over TV that everybody's talking about is the recovery rebates. And these are the $1,200 payments to every taxpayer that are coming out. Basically, if you filed a tax return in 2018 or 19 and you made under certain income levels, every adult is going to get a $1,200 check and $500 for every dependent child under 17. There's nothing more to do. All you have had to have done is file a return. If you included your banking information with your return so that you could receive an electronic refund, these payments will be wired directly into your bank account, and they're expecting it any time. There are income limitations, so single filers that make under $75,000 in adjusted gross income as reported on their tax returns will receive the full $1,200. Head of household filers under 112,500 will receive their full benefit. And if you're married filing joint filer, anybody under $150,000 of adjusted gross income will receive their full benefit. There's phase outs for single filers between 75,000 and 99,000. Head of household between 112.5 and 136.5. And joint filers between 150 and 198,000. Again, I think Secretary Mnuchin just came out today with some clarifying information. There was a lot of questions about some senior citizens whose only source of income is Social Security, and they're not required to file a tax return. Do they have to go ahead and file one? And the answer seems to be no. If you're receiving Social Security, and you get your Social Security 1099, They know where your money's going and they know what you make, so you'll be getting that check automatically. There are some enhanced enhanced deductions for charitable giving. A lot of, with the raise in these standard deductions, a lot of folks do not itemize anymore. And even though they're still charitable giving, they're not getting a direct benefit for that. So there's, the government has added a $300 above, what they refer to as an above the line personal income tax deduction. So you don't have to itemize and you can deduct from your taxable income $300 worth of gifts to a charitable organization. There's a provision for student loan payments. Some employers, as part of their compensation program, pay their employees student loans. That is now, if that's the case, normally that's included as your W-2 taxable compensation. That is amounts up to $5,250 are now excludable by income by the recipient. Those education expenses, or those, I'm sorry, those, it's student loans. I'm sorry, it's not the direct educational expenses, it's the student loans. But the student loans have to be for education provided to the employee. Can't be for their family, it has to be to the employee. Another pretty big one is a waiver of that 10% early withdrawal penalty on any retirement plan distributions, up to $100,000. However, the need for the 100,000 or less distribution must be directly related to the coronavirus. So I'm not sure we've got clear indication on if you're unemployed because of the state quarantines, but are not directly infected with or being treated for coronavirus, if this applies. I don't know if Marco or Aaron have any input on that at this point, but you are allowed, if you are directly affected and you need to draw from your retirement plans to maintain your life, you can draw up to $100,000 without penalty. You do have to pay the tax, of course, and you can elect to take that taxable income over a 3-year period. And you can, if you so choose, redeposit those unused funds back into your retirement plan over that 3-year period without having to worry about any of the limits, the regular contribution limits. Marco or Aaron, do you have any commentary on that one, whether the definition of being directly related to the COVID-19?
Yeah, our understanding, is that it's, if you've been quarantined or furloughed, or, even having to work reduced hours, that would be the sort of financial consequences that would permit you to withdraw early.
Okay, that's good. There's also a temporary waiver for 2020 of required minimum distributions. So for some folks who don't necessarily need to take money out of their retirement plan, they're fortunate enough not to need that. They can keep that in their retirement fund without having to incur any penalties for not making the required minimum distributions. My next bullet point on my notes is the unemployment insurance provisions, and I'll defer that to Sherry at this time. There are a bunch of business tax relief in the CARES Act provision, and the two large ones are the employee retention credit, which allows employers that are keeping their employees on payroll to receive a credit for the Social Security and Medicare taxes that are paid on those wages. They can get a maximum credit up to $10,000 per quarter, per employee for all quarters, I'm sorry. And this applies to wages between March 12th, 2020 and December 31st, 2020.
Sorry, Dan, just to jump in,
Sure.
it's the 10,000 is the amount of wages that are permitted, so that it's, because it's a 50% credit, the credit per employee is really capped at 5,000.
Oh, okay. All right. I had not heard that. Okay. There's a caveat to that though, and if you qualify and receive the PPP loan program, you are not allowed to take advantage of that credit. There is also an employer payroll tax payment deferment.
Hey, Dan?
Yes.
I'm sorry, if I could just jump in before you move on. Marco and I have done an analysis of whether or not you're better off with going with the PPP loan and seeking, forgiveness later on, or the tax credit in about 98% of the time. We have determined that going with the PP loan and seeking forgiveness of that loan winds up being better for the taxpayer than getting the tax credits.
I haven't put it on paper, Aaron, but I don't doubt that. Yeah, the PPP loan program in my kind of neutered these first two provisions. The second provision being that if you continue to pay your employees, you can defer payment of the taxes. The 50% of the amount deferred, I believe, is not due till December 21, and the other half is till December 2022. Yes, but under both of those provisions, if you qualify for the loan, the second provision, if you qualify for the loan and you have the loan forgiven, you cannot take advantage of that. So I think you're right, Aaron. I think the qualifying for the PPP program does kind of neuter both of those or make those kind of a moot point. And again, I guess right now we're assuming that everybody that applies is going to get some loan money, which might be presumptuous on all of our parts, because I'm not sure how far $350 billion goes. But I'm only one little CPA in Birmingham, Michigan, and I've done nothing for the last 10 days but figure out how to get the maximum amount of these loans. So these same conversations are going on across the country. $350 billion, I think, is going to go pretty fast.
Dan, this is Brian Hare. One of the considerations that we've had the past couple of days is some businesses are realizing that they might not be able to bring their workforce back off unemployment the same time that they're going to get their PPP money. And we're now starting to have discussion that maybe, depending on how long it goes before they can bring their workforce back, it might be better to leave them on unemployment for a while and start looking at this other credit. I would say 3 or 4 days ago, we weren't even having those discussions, but it's now started because nobody seems to really have an understanding of how long we're going to be in this and how long they're going to be keeping their employees on unemployment.
Yes, I've had quite a few discussions with clients about trying to make the application for the PPP loan now and trying to time the distribution of the loan so that they're able to meet the 8-week measuring period. Because in order to qualify for forgiveness on that loan, we're jumping ahead a little bit, but in order to qualify forgiveness on that loan, the money has to be spent by June 30th of 2020. And the measurement period is 8 weeks from the time you get the loan proceeds. So we've got some folks that are interested in trying to time the receipt of the loan proceeds for sure. The other provision, Brian, is that what the purpose and the intent of the PPP program is to not necessarily bring people back to work, but to pay them.
Right.
So, the government wants your people on your payroll, not on unemployment. And that's really the push behind this money, is getting this out so that we don't have a run on the unemployment program. So yeah, I mean, here in Michigan, we've got a lot of people that would love to come to work but can't. And business owners, many of which are on this call, are probably wondering, is it better for me to go for the loan proceeds or just leave my people on unemployment? And we can that becomes a numbers game as well when you factor in this additional money that's going from the federal government to fund the state unemployment programs.
Hey, Dan, this is Joe. One of the things that we're hearing from folks, or a couple of clients that they're talking, in a couple in particular, they don't expect that they'll be back up operational for 6 months because they do big events, which either the first quarter have been canceled or deferred, that they don't expect people back 6 months. And their concern is they pay people for the 10 weeks. And then after that, they're looking at contemplating having to lay them off again on the backside of it. And isn't there a provision that they have to be employed as of what date afterwards?
The covered period, Joe, for everything in this loan is through June 30.
Right.
So I think once you cross over into July 1st, all bets are off.
Okay.
I mean, boy, the ink was barely dry on this bill, and I saw Nancy Pelosi on CNN talking about what the next tranche of the bill is going to be. And how much more money they're going to need. That could just be a chance to take a swipe at Trump. But I have been talking to a lot of people in the last week, and a lot of people think that this $350 billion is going to go pretty fast, and that they're going to need to keep funding this. So I don't know, Joe, what that means in terms of dollars or length of period.
Right. I would say this, Dan, I saw something somebody had communicated off to us that the conversation that had been on our guidance is that these funds are first come, first serve, and it was referenced they will get more. So.
Okay. That is somewhat reassuring, I'm sure, to our audience, but
Famous last words, of
doth
course.
politicians speak with forked tongue often?
Well, there are $2 trillion on the other plan that they may be able to divert some of those dollars, and they're also talking a fourth tranche of this. So as you say, when this runs out, and there's a good chance that within 2 days of it, actually applications flowing through, that there's pretty big numbers. These numbers can eat this up fairly quickly.
I can tell you from personal experience, I've got a relatively small company that's basically they don't really make anything. It's a service business, and they're relatively small in numbers, but their calculated loan is over $3 million. So the numbers are going to go quick. Yeah. Let me just hit a couple of the other high bullet points for corporations, because we do have entrepreneurial corporate business owners here. We've got, there's been some modification of the business net operating loss carryback rules. So companies who reported tax operating losses in tax years 2018, 19, and 20 are now eligible to carry those backwards and apply those losses against income in previous years. They can go back 5 years. That was something that was taken out in the Trump Tax Reform Act, and now they've instituted that, a way of giving corporate taxpayers some additional liquidity for taxes paid in prior years that they can now recapture. There's 2 provisions in the new Trump tax law that revolved around excess business loss limits and business interest deductions. Those have been expanded and or lifted, which in essence gives taxpayers additional tax deductions, which to reduce their tax burden. There are some expansion and lifting of some limits on minimum tax credits for clients that paid alternative minimum tax in prior years and were limited on when they can claim those credits. Those limits have been accelerated. In the Trump tax law, there was a very favorable depreciation deduction for a qualified improvement property that seemed to be an oversight when the law was drawn up. And they've taken this opportunity to correct that oversight. And it now qualifies what it's termed qualified improvement property to be able to qualify for 100% immediate expensing. And that's retroactive back to 2017. So for any of our participants that may have purchased a building, some real estate, or built real estate in 17 or 18 and had a cost segregation study done, they may have missed out on some potential additional depreciation deductions because of this oversight. There's an opportunity to go in and amend prior year's tax returns and claim that depreciation now. And then there's some provisions about debt forgiven during this COVID crisis period and the non-taxability of that. So those are some of the highlights of the tax that don't relate to the PPP program, but all affect individuals on this webinar and their corporations. Marco or Aaron, would you like to jump in on any of those or cover any that I didn't mention?
I think you hit the main points there. Thank you.
I might point out that with the decline in people's investment portfolios inside their IRAs, and with the ability to harvest operating losses more easily, now might be the time to consider.
Hey, Aaron, we can't hear you.
Can you hear me now?
Getting better. Try again.
All right. So the point is, consider converting your IRAs to
Nope.
Roth IRAs.
Can't hear you.
Okay. I apologize.
Aaron, we can hear you. You're just muffled, so I don't know if you need to speak just closer to your speaker.
Okay, is this better?
Yes.
That is better.
Okay. So the point I was making was that with the decline in investment portfolios inside your IRAs and the ability to harvest losses, you may want to consider converting your IRA to a Roth IRA. And then being able to have those IRA dollars continue to grow tax-free, but avoid income tax on the way out when you make withdrawals.
I could hear him barely. Do you want me to kind of repeat that?
Yeah.
Yes.
I think what Aaron was saying, and apologize about that being muffled. I think what he was saying is with your investments inside your traditional IRAs suffering from the financial crisis here, the values are decreasing. This might be a good time to get with your financial advisor to talk about a Roth conversion and converting some of those traditional IRAs while they're low into Roth IRAs, paying a nominal amount of tax, but getting the benefit, the tax-free benefit of all the growth when we hit the recovery period, hopefully. Aaron, did I capture that?
Yes, you did. Thank you.
Good.
Okay. Before we move on, any of the other panelists want to add anything? Okay. So what we're going to do next is we'll first spend some time going through the Paycheck Protection Program, and then we will turn it over after that to Sherry, and she's going to talk about human and also HR issues relating to COVID-19, and then we're going to do question and answer after that. So as we go through these slides on the Paycheck Protection Program, I encourage all of the presenters, the panelists, to contribute to the slides. I won't click too fast, and that way you guys have a ability to jump in. As we go through this, note that things could be changing now. A lot of this is the panelist interpretation of the Paycheck Protection Program. And there's a lot of different analysis going on right now. So let's get right into it. And when my partner put this slide in here, I called him and I said he put it in upside down, and he corrected me. He said, I put it on there for a reason, and you'll see. But he said, really, this is what's happened to all of us. The world's upside down. And he said, hopefully, EO Detroit and the panelists can help kind of write all this for all of us. So a little bit of background, and again, panelists jump in at any time, please, to add to it. But as Dan said earlier, it's about a $349 billion program. It was really the intent to get money to business owners so we can get it to our people and get them off unemployment. And then some fun facts that we saw, with the Sba Lending, there's normally about 50,000 loans issued per year, approximately 30 billion. And we have read that they are now being tasked with getting out about 12 times the annual volume of money into the businesses in a matter of 2 weeks. And this is in here just because, just to draw awareness that I call this a Herculean task that the United States has in front of us to try to get this program, regulate this program, get the money on the streets. Joe will probably appreciate this. Give all your banking relationships some slack. They're doing an absolute incredible job, in my opinion, like I've never seen before, to understand and try to administer these programs. It's been unbelievable. So you guys should all thank your banks in the next couple of weeks at an unbelievable job that they're doing to try to administer all this. And then Joe, I think you said this, but I would like your opinion on this. We are hearing that there's money there, but we should hurry, and the money is probably going to run out. It sounds like there's going to be more money coming into the plan. What are your thoughts on rushing into this now, getting our applications in? Do we get them in today? Do we get them in next week? How long? And I know Dan had brought it up also about timing. Should we be trying to time getting our loan proceeds in when we can bring our workforce back? And if we do we run the risk of the money's going to be gone?
Yeah, all good questions, and the easy answer for it is we're not quite sure. In the end, there is guidance, which is still, the final guidance has been provided, but the final guidance still needs a requirement or as public comment for the SBA. So the final guidance isn't fully out to the banks yet. So all the banks have today, anybody who would indicate they were taking applications today weren't taking applications. They were taking reservations, which is the same citizens talking as far as the industry. So we are taking the names of people that want to participate in the program because nobody has the capacity to enter applications yet because the final guidance isn't complete from the SBA. So if anybody is indicating that they're taking applications, the reality of it is they just are not taking applications yet. The big issues with the guidance are, one, none of the banks truly know what's asked, what ultimately is going to be the final, what the final application is going to need to look like. What's called the final applications out on SBA.gov and Treasury.gov today, but that's changed each of the last 4 days since it went up, or 3 days that it went up. And each of the applications that are going to come in are going to be driven by whatever looks like with the requirements. We don't know what the information is going to be required for the banks to confirm with the support documents that are going to go through. So that being said, once all the applications, everybody lined up this morning, and I have honestly been on the phone 7 to 7 since Monday, and trying to calm people that they are not in queue and that the money's going to be running out by 1 o'clock. You know, the concern is the system's going to crash as soon as it's up. There's no quote unquote one system. And then the second is going to be the money will run out as soon as as it's opened. Process-wise, this is not going to be a one day that the money rolls out, because internally how it's going to ultimately have to work is the banks are going to get an application. The banks are going to have to approve or vet the financials. So the banks are going to be the ones ultimately who are telling that box that says this box times 2.5 has been vetted, that it makes sense that the number is the number. So that being said, it still has to go to the SBA. The SBA is going to have to issue, this is just the nuts and bolts of it, it's the boring stuff. SBA is going to have to issue a loan number. A bank can't book that until they have the SBA guarantee number. So it's a little bit, it was a little bit aggressive for the Treasury Secretary to think that, you know, you'll be able to go in on Thursday and get a same day approval and fund it on Friday. It's probably not going to be quite that rapid. The intent is to be quick and to get it there. So the question is, can you time this? Can you look to say first in, first out? The money's going to run out. We all don't really know. Easy answer for it is maybe, with all those questions. The guidance is going to drive a lot of the process, and the process will be determined once it's that final guidance is determined by the banks. And that's not just Citizens, that again is all the banks. We sit on a consortium with the top 20 banks who have been working through this whole scenario to try to get this process worked out. Intended to be a digital process and a simplified process. And so at this moment, we have on our website now, you can go and register, and I can take your information for, if you're a Citizens client, that you're in the queue. But realistically, until the final guidance is out from the SBA, everyone's in the queue, but nobody's having any applications processed. So that being said, first, process. Second, will the money run out? You know, it's a lot of money, but as Dan said, if you do the math and you see what people are saying, 265 or 365 billion dollars isn't all that much money if 3 million people have the ability to get 3 million companies can get big chunks of dough. It's suspected everybody's going to apply for this. So what will that look like? I just saw that said, you know, there's likely we're going to request more. They can allocate more from the 2 trillion on the EIDL program, but none of that is stated. And everybody's concerned that when the money runs out, the money runs out. We don't know the answer to that as well. So that was a fairly long-winded answer to say, I don't know, I guess in the end.
All right. We'll go to the next slide, and who can apply? So small businesses, including sole proprietorships, independent contractors with fewer than 500 people and that were in business prior to February 15, 2020. Also, nonprofit organizations, veteran organizations, tribal businesses concerns are also eligible. As we know, the small business application process began today, and for self-employed and contractors, it starts on the 10th. Before we move on, do any of the other panelists want to add anything? Okay. And so how much is the amount? So really the loan for the business is going to be the lesser of $10 million or 2.5 times average monthly payroll costs, and you know, calculate over the 12 months prior to the loan origination, and that when we're considering the payroll costs, we can't consider any payroll that is in excess of $100,000. And there's been some, we've gotten some questions. If I have an employee that is making over 100,000, do I have to remove them completely? And our understanding is no, you would remove the excess. So everybody up to 100,000. And then also you would, on the maximum amount, you would be able to add in your EIDL loans that have been made this year all the way through April 3rd. Before we move on to the next slide, one of the questions that we've got, I'm curious of the other panelists, when we're submitting our payroll records, is it the 12 months ending when I submit my loan application, or am I allowed to use 2019, the 12 months ended December of 2019?
Well, that depends on who you talk to, Brian. The literal reading of the law says that it's a 12-month look-back period from the date the loan is issued. So if you can look into a crystal ball and figure out when you're going to get the loan in advance of applying for the loan, you've got the answer. From a practical standpoint, what we've been telling our clients is look back from April 1st through March 31st and use that figure. Then the SBA came out with a lot of frequently asked questions, Q&A documents that are saying, and even, I believe possibly even in the application itself says, it will be derived from your 2019 payroll. So the law says 12-month look back unless you're a seasonal employee. But SBA seems to think 2019 will do. Again, it's unclear. We've been telling our clients, talk to your banker, work closely with your banker and find out what they need and give them that.
Marco, Aaron, do you have a perspective on this?
No, that's exactly what we've seen, that, you know, in the regulations that came out last night called for the prior year and the application still is based on 2019.
Okay. One of the items I want to go to the bullet point where it has the EIDL loan, and I'm going to ask maybe Joe or any of the panelists to add some insight. It's our understanding now that if a business got an EIDL loan through the SBA, the portion that would be rolled into the PPP would be the portion that you got as it relates to payroll. And then, and that would be mandatory. And the portion that you may have gotten for accounts payable or other expenses, it could be optional to roll it into the PPP. What is your understanding, Joe?
That is my understanding, is that it would be, again, subject to final guidance, but my understanding is that you can't have two 7A transactions. So, and it depends which is how the EIDLs are going to be 7A transactions, and the PPP programs are absolutely 7A transactions. So I believe that if you have the one that it just said, the EIDL, you're going to have to roll it into the your PPP into the EIDL. Dan, does that sound right?
Yes, that's what I'm seeing. Initially, we thought, we were hearing as well, you couldn't have both at the same time, but the brand new PPP program borrower's application form has some additional language that was just issued either late last night or early this morning that appears that you can do 2.5 times your average monthly payroll and add to that the EIDL loan proceeds advanced, subtracting that. Apparently part of the EIDL loan, there's a $10,000 grant, and you obviously they're not going to let you forgive that twice, so that gets deducted off of it. You know, the PPP program is fully guaranteed, low doc, you know, basically a 2.5-page application. Joe, how extensive is the application for the EIDL program? Is that 20-page one?
No, it's stripped down, but it's again, it's your jumping off point. You're going to get a 2-page, 20 questions that you're going to complete and submit, and it's going to submit back to you that thank you, we've received your application, and you're going to have, it's going to tell you everything that it's going to need from there. And that's going to be more of a traditional, it's a traditional SBA transaction. So from there, you're going to get the notification of everything that you're going to need, okay, which will be considerably more substantial than under the PPP program.
And those generally come with some pretty extensive fees, some prepayment penalties.
Those are, yeah,
guarantees, personal guarantees, corporate guarantees.
Collateral.
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 Right.
And whereas the PPP is naked and it's a sign and drive. There's no guarantee, no collateral, no secondaries. On the traditional SBA, you're going to have collateral requirements, guarantee requirements. They're loosened under the program relative to, but you're still under that. The expectation is you're probably still going to have to, if there's equity in your house, pledge your house if there's not sufficient equity in the business for get to a 1-to-1 collateral coverage.
Any idea what the bank's going to do if there's 2 applications been submitted at the same time and neither one approved?
No, I think the issue is going to be, that the SBA is going to have a determination thus far, because the bank won't know. The bank isn't processing the EIDL program. That is direct. That's SBA direct.
Okay.
So it'll ultimately get back to, we're not sure how it's funding, but we're administered, that underwriting of that is direct with the SBA. So my guess is what will happen is that it will come back to, from a limitation standpoint, they'll be able to say that you've got 2 programs going and make a determination of which the client wants to determine is going to be formed. There's a lot of folks that are looking and saying, I'm applying for both, and then I'll make the determination of which the other, because the EIDL program, you don't request an amount from that program. You submit your financials, you submit the data, and the SBA comes back and says, this is what you'll qualify for.
Yep.
Okay.
Yeah, I've spoken to probably 50 clients in the last week, and only one has said that they don't want the PPP program loan. They wanted to try and go for the EIDL loan. And the only reason he was thinking about that was he is a used car dealer, and he wanted to take an opportunity to get as much money as possible and pay off his floor plan financier who had real high interest rates, and he was going to basically turn this in. His intent was to turn it into a long-term term loan. And the PPP, that is not the basis for the PPP program.
That'll
PPP
disqualify it
program is
altogether.
basically in a 2.5-month bridge payroll tool.
It is,
Okay.
yeah, that's exactly right, Dan.
Right.
All right, I'll hit the last bullet point on the slide, which is, the business the business must have payroll or have payments to independent contractors to obtain the loan. I'm going to circle around in a little bit on the independent contractor issue because I know a lot of members of EO Detroit probably have questions about that. We're going to go to how do I apply? So really, I think we've addressed that. Call your SBA lender, call your primary banking relationship and talk to them. I know the clients that we've been working with, some of the smaller banks are taking the applications in PDF and saying, send it to us PDF. I hear a lot are doing the online logins. We got word that from one of our clients today that they're with a major bank, and the major bank said it's by invitation only, and that you have to have both a bank account and a loan with them, and a loan account. And the client was kind of upset, called them, and they allowed him to make an application because he had a credit card with them. We've heard, like Dan, we've talked to 40, 50 clients that are trying to do this, and we've heard a hodgepodge of how you make applications, and also what documents are required from, different banks are giving very, very different advice or having different requirements, all the way from, we've heard, don't send us anything, to send us payroll records, W-2s, 1099s, 941s. It looks like we may have lost Joe, but if he's still there, I'm hoping Joe can comment on that. If not, any of the other panelists.
I'm here, sorry.
I don't know if
I had a question, but you're absolutely correct. There is no standard across the board. It's funny to say that I was just reading that organization that you suggested is making the appointment only and with loan. I have a client who just said, how is it possible they submitted They've reported that they submitted for $6 billion of loan applications today, which they can't because there's no process set for that yet. So again, back very, very briefly, as indicated, the application process is still nebulous across the organizations. If you don't, the one thing that one is driven is that you're driven to your primary bank to do this. You're not, you won't be able to just pop into the, to be able to go in SBA shop for transactions here, because they're going to defer you to your bank for one primary reason, is that there's a giant concern for fraud in this program, because if you're pumping dollars out the door in the quicker, all your banks have already done the anti-money laundering and know your customer due diligence on clients. So the intent of this program is not to find new clients. It's not a relationship building event for banks, nor to build a balance sheet for banks. This is the banks are conduits to get these dollars to the street. So that being said, it's still unclear what is required in what will be the ultimate. There's not a quote unquote standard, because again, the governance isn't final. But here is, if you just look at what we're going to look at, and this isn't final, but under the current guidance, I just pulled this up as I was looking at it. Citizens, we are going to look at your business launch date, revenue, and mailing address. That's going to be confirmed because that's all on the app. But you're going to do your 2019 quarterly 940, 41, or 44 tax reports for the 12-month period, based on the ending on the most recent payroll date is what we think is going to be. For independent contractors, you'll use 1099s for 19. Health insurance premiums paid by the owner under a group plan, and sum of all retirement plan funding that was paid by the company, not pulled from the employees' paychecks. So that being said, that's what we believe is going to be our final, but until we have the final guidance from the SBA, that's again, and all that's going to be driven to determine what satisfies the SBA's guarantee. So if we're sending to the SBA, we've vetted the payroll number based on that information. That's going to drive what the guarantee is. So that is the big thing. Every group. So again, back to that last point of banks sending you to your bank to do it. If your bank does not have the capacity to support or participate with SBA, or it's you use a non-bank financial, you can go to a bank to support that. The Treasury is going to push you into a bank to do that, but you're likely going to be moved into you are going to be third or fourth priority down the line from existing clients, getting everything through PPP, through loan modifications, and then getting third parties. So in theory, if the money runs out, you may be SOL, so to speak.
Okay, thank you. I'm going to go, I'm going to flip back a couple slides. A couple other key points on here is our understanding is if you have multiple businesses, and let me go, I thought I went one slide too far, but if you have multiple businesses, multiple operating businesses, it's our understanding that each business would submit its own application. From the panel, is that how everybody understands that? And I'd say if not, speak up, but if so, then we'll just keep going.
Yeah, that's my understanding, Brian. And one thing that some folks may want to consider is that own multiple businesses that are on this webinar. Some people set up employee leasing companies, or they use a common paymaster situation where you may have employees from multiple different businesses all on one payroll. You might want to, you might need to provide to your lender a breakdown of the employees by specific business, because you're going to want to request the loan in the federal ID number and name of the operating business, because when you go to submit your expenses for forgiveness, most most likely your PEO, your employee leasing company, will not have any of the other expenses that qualify for forgiveness, like rent, business interest, utilities, etc. So I've got several clients that use a common paymaster system with 3 or 4 different businesses. We're advising them to submit for the loan in the operating business, and you're going to have to provide the allocation of the employee costs to the bank separately.
Thank you.
I
Okay.
think the one other item that I think the banks aren't fully sure of yet is what the SBA's affiliation rulings are going to be. That's always taken into account as far as affiliate companies. So I don't think that's been fully determined as well, as if they're going to be looking what to look back to other companies as well. So there's some more determination coming on that as well.
Okay. Now, either Marco or Aaron, I'm hoping you can help us on the legalese on the certifications or the good faith statements that business owners are going to have to sign. I've got it up on the screen now, and you know, I'll walk through it, and then maybe you guys can, or maybe Marco or Aaron, can you walk through this for us on some of the, you know, the legal statements and what that might look like? And if not, I'll take it over.
Yeah, that's, I think that's fine if you want to take that.
I mean,
Okay. So I'll read down these, and you know, we've had some discussion on it and what does this mean. So you know, really what a lot of this says is that I'm not going to take, I've not gotten a loan already for these purposes. I don't have another loan application out there. The one that I've gotten the most questions on are the second bullet point, or the second item on there that says the current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. So we've got a lot of businesses out there, a lot of our clients in the medical world, the construction world, they've been dormant or they've been shut down for a couple of weeks. But I've got a lot of questions around, well, what about a professional services organization? Or what about an organization that has not been directly impacted yet? Maybe that's a remote workforce or maybe an essential business and their workforce is still working. Would they be eligible for this? And then what if my business has, you know, I was a smart business owner and I've got a lot of working capital. I built up for the rainy day. I have 6 months on reserves like a business should. Am I going to be penalized for that? And I'm really interested in what the panel has to say and what their interpretations are. Maybe we can start with Marco and hear, you know, what advice would you give for a business that says, I've had some impact, but I really don't know where this thing is going to go. I don't know in a month from now or 2 months from now what my business is going to look like. Or professional service provider says, I don't know what's going to happen to my budgets for my customers. Or what if we got a lot of working capital? Do you think that the advice is, would they still qualify?
well, Brian, can you hear me?
No.
So the point I was going to make is, I think, no.
Hey, Aaron, can you go really close? Maybe if you go really close, like even closer, we won't look up your nose. You go close because we want to hear you.
Is this better?
Yeah, go maybe to your left. See what happens. How about
right.
your right?
Can you hear
All
me?
right, try there.
Okay.
Sounds great.
All right. So I'm sorry. I apologize, everyone. The point I was going to make is that the way you frame the question, Brian.
Aaron, you cut. I'm sorry, you cut out again. It starts great and then it fades. How about Marco?
Yeah, let me jump in because we had talked about this sort of issue, you know, with an employer who does have a lot of cash, and it had, you know, my initial thought was, you know, that would, you know, be difficult to make that certification, but really, you know, what it's, you know, if you focus on the word, you know, uncertainty, I think really kind of opens, you know, even though you have enough cash in, you know, for the next, you know, 8 weeks, you know, the key language is uncertainty, and we, you know, really don't know. I think that you know, would allow a good faith certification in most cases.
Okay. Hey, Dan, what about a company like your organization or you know, Fenner, Maelstrom, or Harris CPAs that, you know, we've probably been impacted, but not, you know, not devastated like a lot of other industries or law firms? Are we qualified?
Yeah, I think we are. My partners and I we've been talking about this kind of all week. Yeah, we're working harder than we ever have been. Now our office is formally closed, and our staff is all working remotely. So we're certainly losing efficiency, and the ability to, you know, communicate with each other as easy as we were all in the office. But I think Marco's point of economic uncertainty is really the key 2 words in that claim, and that yes, for the first quarter, maybe most professional services firms' cash flow has been good, but we really have no idea of what is ahead of us, how many of our clients are going to survive, let alone be able to pay us in a manner that we're accustomed to and they've been accustomed to. The intent of the loan is to keep people working, right? We have kept all our employees on payroll. We're not working as efficiently as we have, but we're keeping them on payroll. A client that has laid all their people off already and is going for this loan and doesn't intend to bring them back, I think might have a harder time checking that box, right? Because they're not really using the funds for the intent provided. I guess I would make the argument that, you know, we didn't have to keep our employees working. We could have sent them home, told them we're closing down the firm and they can go collect unemployment. We didn't do that. We're using the funds for the intended purpose, which is get it to the employees to keep them paid.
Okay. And yep, that's, you know, I think every advisor has their own interpretation, and ours has been the same way. Okay. So we're going to move to and we're going to go through a couple slides pretty fast, because I think, and what we're trying to do for all of the participants is really focus in on probably the most ambiguous points or the most disputed. And a lot of this, we're not going to spend a lot of time because it's just regurgitation of what's out there. But up on the screen is the payroll costs, it's salaries, commissions, payments of cash tips, payments for vacation, parental, family, medical, sick leave, allowance for dismissal or separations, payments for provision of group health, state and local taxes assessed. My understanding of that really means state unemployment taxes, payments to the retirement benefits, and then independent contractors, which I have a question mark on. We're going to skip that. We're going to come back to that in the question and answer period, because I think we could, you know, we can burn some time on that now, but I want to kind of keep going. Before I move on, does any of the panelists have anything else they want to add to this slide? All right, then we've got, you know, really what's excluded. So what's excluded is compensation for an employee whose principal residence is out of the U.S. Any employee who has compensation over 100,000, you have to remove the excess. Employment taxes and qualified sick leave under the Family First Corona Response Act. We're going to come back and I'm going to skip some of these slides because we've already talked about most of this. We're going to skip a couple of examples. And then just what we understand, and I realize that this is just our understanding right now, that once you're approved, the bank will deposit the funds directly into your account. And I'd be interested in Dan's opinion on this. We've heard and had a lot of clients ask, should I take the money and put it into a separate bank account? We said we think that there's going to be an audit procedure when our clients submit an application for debt forgiveness, so that may not be necessary. What are your thoughts, and how are you answering this question when you get it?
Yeah, it's a challenge because the way the law is worded, it says explicitly these are the things you're allowed to spend the money on. But if you've got money in your bank account and you put the loan proceeds in, it's all commingled at that point. And to me, it seems like a moot point as long as you can prove that you've spent dollars on the intended uses for forgiveness. I personally don't know that it matters whether you used your existing funds or the loan proceeds. I mean, that's my opinion. I don't know if Joe's got any opinion on how the bank plans to audit this. I suspect he doesn't, but I did have one client that say, I'm setting up a separate checking account.
Okay.
And I'm going to put my money in it, and we are going to fund payroll out of that, and we'll transfer funds out of there into our Impress payroll accounts, and I'm going to write rent checks out of there. And I said, well, it's not a bad idea, and I can't argue against it. To me, from a practical standpoint, it seems kind of silly, but
okay,
the government is in charge. Who knows?
So I've got this, now Dan touched on this earlier. So our businesses take a loan for 2.5 times the payroll amounts. And then if we use it for qualified purposes, there's going to be an application process later where we can get forgiveness of the loan. And the rules are pretty clear. It's when we originate the loans, we have about 8 weeks, or not about, we have 8 weeks to use the money. And if we use it on maintaining or rehiring our employees, maintaining our salaries, we can use it on the payroll costs, our rent, utilities, and interest on mortgages and other loans that were in place before February 15th. One of the things on this slide that I think is critical, that 75% of the money needs to be used for your payroll costs. And we're hearing that some banks are asking for an allocation of how you're going to use the proceeds on the application, or on a schedule. And we're just recommending that if you're asked to do that allocation, you show that 75% is used towards payroll costs.
Yeah, and conceptually speaking, if you're able to borrow, in essence, 10 weeks of payroll, and you're required to pay payroll for 8 weeks, right?
Right.
You should be, if you kept everybody at full employment, you should, in fact, hit that 75% mark. No problem. You should, in fact, hit 80.
Yeah.
Leaving the other 20% of the money borrowed to cover those other qualified expenditure categories.
So then we've gotten to the end of the 8 weeks and we haven't used all of our money. What happens? And it's our understanding that that the money that is not forgiven, payments are deferred for 6 months, including interest payments. There's no collateral personal guarantees, and what's not forgiven, it has a maturity of 2 years and an interest rate of 1%.
Or it can be repaid.
Or our understanding is no prepayment penalties to repay that loan.
Correct.
Okay, so what we're going to do now is we are going to, before we get into questions and answers, we're going to turn the floor over to Sherry. And Sherry's going to dive into really the human aspect of what's going on now, and also the HR compliance aspect. And Sherry talked to us panelists yesterday, and she's got a really, really great perspective about, human beings. We're dealing with human beings, and we've been focused, especially all of us financial advisors, on money and the triple P loan and the EIDL loan. But in the meantime, we're forgetting about our employees. So I'm going to turn over to Sherry, and Sherry, I'm going to try to stop sharing my screen and allow you to share yours. Anna, maybe you can help us with this. And then we'll have her get going, and then we're going to dive into question and answer after that.
Brian, I think that you just need to take it down. Go down to your share screen.
Oh, I got it. Here we go.
Okay.
I'm done sharing.
Okay. And I think Sherry, you're on. Thank you, Brian.
Thank you, panelists. We're going to ask all of the panelists to hang on with us till till Sherry's set, and then we'll get into question and answer.
Okay, can everybody see my screen? The human side of COVID-19?
Yes.
Yes.
I can see it, Sherry.
Okay, and how's my volume?
Volume's
Good.
good.
Perfect, okay. As stated, I'm going to focus on the practical side of employees for employers. And we've heard a lot about, do we lay off, do we not, do we bring them back, do we not? And it's very important that we really think about this human side, because people are scared, and rightfully so. When you look at the virus in Michigan alone, this is yesterday's number. I guarantee you it'd be much higher today. Total cases, 10,791. I'm an employer of 15 employees. One of my employees just tested positive. I've dealt with 10 employers that have employees that have tested positive, and several in a day. The deaths are up to 417. We hear a lot of information about we got to flatten out that curve, and we can all see that the curve isn't flattening yet. The information changes daily. The news is bleak. Work is interrupted. School interrupted. That's a disaster with all the kids. Anxiety is increasing, and stress is increasing. From a financial standpoint, many don't or can't plan for tomorrow. This is a live for today's society. One of the main draws nowadays that they're advertising is get your paycheck same day. There's a reason for that, because 40% of Americans don't have $400 in the bank for an emergency. And these are the numbers in Michigan. So far, as of yesterday, 439,000 employees were handed a pink slip. Now, I don't know if anybody remembers pink slips, but that's a layoff notice or a furlough notice. That ages me just a little bit, but that's a huge number. That's a climb of 6,000%. And right now, 1 in 10 employees is not employed. So it's important that we consider some things about our employees. They have never stayed home to watch their kids, typically. Now they must educate their kids. They have immediate family members who are working, which increases the risk of exposure. They have to cook meals for the first time in many cases. And in other cases, they actually have to plan those meals and attempt to get the groceries, which I don't know if you've attempted. It's pretty bleak in the stores these days. They never really had to worry about germs. This is an area that I had covered all my life. I don't know where you guys have been. You're finally catching up to me, a germaphobe. And many don't even have a thermometer at home. And it's difficult to find one now. They no longer have a social support system. And socially, they're isolated and struggling. They've never, ever had to prepare for a pandemic. And so when you look at Maslow's hierarchy of needs, you know, what you're going to find is that your employees are on the lower end right now. They're struggling to find food. Nobody's getting enough sleep right now. Personal security, that's a scary thing. People are afraid of losing their homes. Employment, let's face it, you know, that's all we've talked about just now for a very long time. And health insurance, I have never seen such poor ability to get reasonable health care right now. If you had a condition, I have a broken foot, that foot has been in a cast for 8 weeks. They tell me, oh, just keep wearing it. You'll be fine. It'll be all right. I'm not going to get care for that foot. Who knows what that'll lead to. So I know it's problematic, and I know others are problematic. There's people with serious long-term disease and can't get their meds. Social needs, friendship, intimacy, connection, that's all gone right now. You know, it's all by way of internet, by phone, and that, quite frankly, doesn't quite cut it. So when we look at that, if your employees' basic needs are not being addressed, they're not going to work well either. Okay, because those needs have to come first. Basic has to be first. So now, what can we do to help? The government has stepped up in and done a lot of things to help. And I'm just going to go over a few of them rather quickly. And we can go into more details if there's more questions about these. One of the ways that they've helped was the Families First Act. And this was in the second group of acts that were passed. And it provides eligible employees to take up to 12 weeks of job-related FMLA if they're unable to work or telework, and that's important because telework is, if it's available, they do not qualify here. Because of the need to care for a child under the age of 18 years. So a 17-year-old, caring for a 17-year-old, I don't know what you do with 17-year-olds and how you care for them, but if you have a 17-year-old, they qualify. And if it's the school or place of care has been closed because of a public health emergency declared with respect to COVID-19. Now, what that provides, and there's some requirements. Now, the old FMLA used to have 50 employees or greater. Now, this new small add-on, which only takes place from April Fool's Day of this year through to the end of the year of this year, employers with less than 500 employees are required. There are some carve-outs for medical industries and some small employers if this is going to cause a serious harm to the business. But otherwise, it's going to provide, if employee has worked only 30 days for you, up to 12 weeks of job protected leave, 10 of which will be paid at 2/3 of their pay, subject to a max of $200 a day and $10,000 per aggregate. The initial 2 weeks is unpaid, but the employee can elect to substitute paid time. And we'll talk about some of the other time that they can substitute. Some of the pros of this are that it will be paid for by the government in the form of quarterly tax credits, and it is not retroactive. This is why you saw a really big influx of layoffs right before April 1st, where employers trying to avoid some of these laws. Now, they were worried about cash flow, but the IRS kind of, they kind of covered that, and that you can actually get an advance on this. And if you look towards IRS Form 7200, that's where you'll find the information in the form to do that. Now, there are tracking requirements to meet both the Department of Labor and the IRS requirements for the credits. Is there any questions on that? Any that the panelists want to add to what I just said? Or does it sound like I got it pretty right?
Sounds like you got it pretty right.
Pretty right, okay. Okay, so the next, So the next is the Emergency Paid Leave Act. Now, this provides eligible employees paid sick time if they were impacted by COVID-19. Again, April Fools through the end of the year. Same kind of requirements, 50 or less, telework if it's available and they can do it. And there are some provisions for opt-out if you're medical or if you're under 50 and this will cause harm. So if an employee is subject to federal, state, or local quarantine or isolation under an order related to COVID-19. Now, the main question I get a lot is, well, what about the governor made us all stay home? That does not count here. The employee is advised to self-quarantine by a healthcare official due to concerns regarding COVID-19, or the employee is experiencing symptoms of COVID-19 and seeking a medical diagnosis. Now, there are some other areas where the employee can collect as well, and that's if the employee is experiencing other substantial conditions specified by the Secretary of Health and Human Services, or the employee is caring for a child if the school or place of care is closed due to concerns relating to COVID-19, or if the employee is caring for an individual that's in their family that is subject to a government or self-quarantine related to COVID. If those last three are in play, then the employee is eligible for 10 days of pay at 10 days of leave at 2/3 of their regular pay. There are limits to this for the full pay provisions, and that's $511 per day. What you want to understand on that is that, so it does provide individuals in a higher pay bracket with more closer to full pay for that. Now, some of the pros related to this, again, healthcare providers or first responders may elect to exclude. You can consider that a pro, and many employers did, but I have to tell you about the human side to that is that keep in mind, if you don't provide your employees with ways of pay and you say, work, 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 come to work, they're going to come to work sick and they're going to get the rest of your workforce sick. So there's a downside to that as well. So although people might want folks leaving their workplace, frankly, if they're sick, you really should consider that they stay home. Sick pay, that's not required to be paid out at termination, and it's a one and done. You can't say COVID-19, gotta be off for 10 days, and then, oops, now my kid got it, I need another 10 days. It's a one and done. And it is not retroactive. Again, it will not go back. You know, it doesn't apply to anything prior to April Fool's Day. So if an employee in either of these two is out on a layoff or a furlough, then they are not eligible to take these credits while they're out or to take this provision. Some of the cons, again, it's got to be tracked, and the tracking is, it'll be new tracking. And you've got to make certain that you're careful to include everything that you need to so that you can get the tax credits back from the government. And if it's a cash flow issue, again, IRS form 7200 can help, and they can advance that to you. Any questions on that? Any add-ons? Anything that I missed with the panel?
Sure, the only add-on that I think I would add is both of these provisions on their face seem really complicated to administer. But if you've got folks that are planning on taking the PPP program and paying their employees when they're off, aren't these kind of neutered in the sense that you're paying your employee, they're not collecting sick pay? They become a little less important.
They do, for sure, but for the short term, because we all might not get the PPP, right?
Yep.
And so in some cases, the employers right now are in dire straits. You know, cash flow is their own bank account or their pockets. So any little bit of this certainly can help. And the worst thing you do is you have to offset because you can't double dip.
Yep.
So
and it's important to reiterate that these provisions extend beyond the June 30th PPP relevant covered period.
Exactly. So, you know, this could come into play. And quite frankly, it's going to, you know, whether or not there's round 2 of this, you know, we do not know when this is truly going to end. So this does cover. And with the schools now just being mandated out, it seems kind of interesting that it would cover, now that schools are out, the kids would have been out of school anyways, but the daycare issue is still pretty relevant there. Any other comments? Okay. So here's our unemployment issue. So CARES Act really extended unemployment. The governor, through executive order, extended it pretty extensively in the state of Michigan, making it much easier to collect. And it's collected for reasons that, you know, would not otherwise an employee be eligible. But under this CARES Act, which is signed into law, provided $260 billion in enhanced and extended unemployment insurance benefits on a temporary basis, secondary to the COVID-19 pandemic. So at this point, unemployment, if needed, is extended up to 39 weeks for workers who can't get access to regular states. So once state, once the state is exhausted, then on a federal level, it can get extended. And if employees can't get access to state level, they may be eligible under the federal level. And for the first time ever, I've never ever heard or seen of this before, is self-employed gig workers, independent contractors, call them what you want, are now eligible to collect. And that is huge. Now, one of the important things to know is that this, when it got signed in, because this has never happened, the unemployment offices, which are managed locally, aren't up and ready for all of this. And so although it's available right now, the self-employed cannot apply. And they're asking them to wait a little bit so that they can update their system to allow for those applications to occur.
Sherry, did I hear correctly that employees of nonprofit organizations are now also eligible to collect unemployment where they weren't in the past?
Under this, absolutely, yes, absolutely. Which is quite amazing because nonprofits don't have to pay in. So it's a pretty. This is a pretty expanded benefit and a very good benefit for the workers. Now, unemployment, so when you think of it, so you got your state level unemployment, that's calculated at a max at $362 a week. And then this on a federal level, they'll kick in an additional $600 per week. Now there's a time limit on that $600, and that is for 8 weeks, as I believe it at this time. It may get extended, but that's the time limit. So this isn't forever that this occurs. This is really get you past some of those basic level of needs, if you will. And also keep in mind that individuals still have to qualify for unemployment. Yeah, and there's wage credits and time credits that still have to be hit on a state level. So it's important to remember that. Any questions on this?
Sherry, is the
Can you hear me?
$600 enhanced benefit, is that, I thought I read somewhere that might be in effect for 4 months, 16 weeks. Is that, am I wrong on that?
That's my understanding.
Yeah, you know, you're right. Right.
It does go out for a full 4 months?
It does, 4 months.
Okay.
Yes, I'm doing bad math today. I can't do 4 times 4.
This is Aaron. Can you hear me now?
I can.
All right, great. I moved to the telephone. So one of the things we're finding with clients is that their employees are trying to qualify themselves for unemployment because between the state $362 and the $600 from the Fed government, it makes more sense for them to stay home than to work. The other thing I would point out is that the $600 doesn't require a separate application. It's supposed to be part and parcel with the application with the state for unemployment benefits, and that the state of Michigan will work with the federal government for those funds.
That is true. That's very accurate. And that is causing a lot of pain and confusion because employees are trying to get on and they're looking for their money. They all expected it to be there as of April 1st, and it's not. There is no update as of last night as to the timing that those deposits will be made, but there is no reason for an individual to go on and reapply. Also, under the federal guidelines, they're a little bit different on the eligibility requirements than at the state level. So there's still a person that might have gotten denied on a state level. They will be re-reviewed. They do not have to reapply. All the denials will be re-reviewed to determine eligibility at the federal level for payment. And so there's a lot of scary things. Employees are all nervous of saying, you know, I don't know what to do. I don't know what to do. You know, the 600 isn't there. How, when, and where am I going to get it? There's no quite answer for that just yet as to when the deposits are going to come. Another important thing to note is that when you're looking at the calculations, like when it comes to the state level, it is really based on past income and income levels. And so not everybody's going to get the 362 plus the 600. They're going to get what they have coming to them based on their payroll records. When an individual applies, a lot of times they think that A, it's automatic right now, and it's not. And B, that there's a certain amount because they see it advertised all over of the amount. So it's a function of, we are as employers not in charge of granting unemployment. The unemployment agencies are. And so we are at their mercy. And that sometimes becomes very much problematic for the employee. They don't understand that. Now, it's also important to watch as all of the unemployment forms come through, because this time now is ripe for a lot of and unemployment offices have been getting fraud claims for the last 2 years. And so you'll see claims filed, like as an owner, you might get a claim filed through on you. And you're like, wait a minute, what happened? That's not me, I didn't file a claim. These are all fraud claims. So it's very important that even though, you know, you're getting lots of them, that you take a look at them, because now will be the time when fraud will be at its highest, because people will not be watching as closely. Any other questions or additions on that?
Sherry, I'm going to, because this one is directly from one of our members and he's asking you specifically. So I think let's just answer this one now, Brian, if that's okay with you. Kirk's asking, if you don't expect to lay anyone off, but have no idea how long this will last.
All right, man, I'm going to
Would it make sense to tell your staff that I have no plans to lay anyone off? Sherry, did you get that?
I did. So you have to be careful because we're all at will and we don't want to create any form of, you know, employment agreements. You know, although we say it has to be in writing and signed by both parties, da, 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 da. You might be silent on that inadvertently because you're a small employer. So if you start saying things, I don't have any plans, I don't have this, you have to be real careful that you don't create a contract of employment with the employees, or even create just as simple as misunderstandings. So a lot of times what I would say is, at this time, we are evaluating this continuously. At this time, our benefits, our you know, our customer level or our customer base supports the staffing levels that we currently have. You know, we'll continue to work with you and to update you and communicate with you. So, you know, there's no need to panic here. We are, you know, this is business as usual at this point for us. Although I know you see it all around you right now, this is where we're at. So I would just be careful not to very specifically call out that I'm not going to do it. You know, I'm going to keep you off forever. I love you all, kiss, kiss. And then all of a sudden you got to let 3 go and they're crying foul. So I'd be careful.
Sherry, we've got a couple other questions that have come in,
Okay.
and I'm hoping we can go through those.
Okay.
So, so here's a great question. How do we deal with employees that were afraid to come to work due to health concerns? We've not furloughed them, and now they're asking to be furloughed. Can you start there? And you had talked yesterday to us, and you told us a little bit about some of the negative consequences if you ask an employee to, also if you ask an employee to come back from unemployment and they choose not to.
Right.
So it's kind of two parts. The first one is, what do you do with the employees that are afraid to come to work? And what do you do if they are asking to go on unemployment now? And you maybe have them on furlough already, you're considering furlough.
Yeah, there's a lot of real panic out there. I've seen just pure terror in people's eyes, like they're scared to death of this. And so for some people it's very real to them, and others, frankly, they're gaming it. And so it's kind of hard to know. There's a lot of laws and a lot of employment issues at play here. The first is, oddly enough, is through OSHA or my OSHA, right? Employers are required to provide a safe and healthful, per their words, work environment. So is your work environment safe and healthful? Part of making it safe and healthful is ensuring that the employees are safe, ensuring that they can't get hurt on the job, they can't get disease on the job, they can't get, that they get to come home the same way that they left work, in general. So you have to make certain that you have the appropriate evaluation of the workforce to keep them safe. So a big piece of that is PPE, personal protective equipment. What do they need to be safe? So after analysis of their job, what do they need, particularly in light of COVID-19? So, they may need hand sanitizer, they may need cleanser that is strong enough to kill germs related to COVID-19 or the virus. They might need distancing or the availability for distancing. They might need masks. It depends. You have to be careful, because if you go out crazy and give everybody respirators, they actually have to, if they're anything past just one of those little general dust masks that require sufficient respiratory effort to breathe through those, then you kind of run afoul that way. So you can't go too far and overprotect, and they're passing out because they can't breathe through them. And so you have to ensure all of those things, and you want to talk with them and say, okay, what is that we need to protect ourselves? Without going crazy. I've heard of some people saying we have to wipe down every 10 minutes. Well, you can limit the number of individuals into your building. You can set up a table for customers to come in one at a time. They go to the table and they tell you what you want. In many counties, there's a note that you put straight on the door that says, stop, don't enter this building if you are this, 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 and this. I've done a different version of that, our own version that's colorful and bold, and it forces them to stop and look at it. So I say you put up both, and not the one that everybody's going to ignore. And so you can do all of those things, and you can talk to your employees. And if you can alleviate some of their concerns, in many cases they say, okay, I get it, I'll come back, I'll work. In other cases, they're going to say, I just can't. Now you got a couple of options. You can lay them off and allow them the opportunity to try to collect unemployment. You may or may not recall them afterwards. B, you can say you have to come to work. We've done the analysis. This is a safe environment. We've done everything we could. This is your job. I need you for this job. And if you can't do this job, then I can't have you as an employee. So you can do that. That's possible. And then, or you can tell them, well, if you don't want to work, then how about, you got this much PTO, burn it, baby, burn it up. take a leave of absence, approve a leave of absence that requires them to take all of their paid time off first and, and go home or come back to work. So you have all of those options. It's really all depends on, at the end of the day, what's your relationship with this employee? What kind of status are they in? Are they a employee you want to retain? In which case you might go the leave of absence. If there's been a terrible employee all along and you're pretty well done with them and 3 of their friends, then yeah, you might, because they're all around you saying none of us are going to work, and you might have to say, this is your job, come or not, this is your choice. Also, one other law that you got to consider is the National Labor Relations Act, which if employees are complaining concertedly about the terms and conditions of employment, and safety is a term and condition of employment, you can't chill them. So you can't say, shut up, it's safe, stop putting it on social media, don't talk to anybody about it, or you're fired. That would be considered protected activity, potentially under the NLRA, and it could get you in a little bit of trouble. So you got to be careful there. So I would handle it on a case-by-case basis with each employee, decide what your strategy is going to be fair, be consistent, document it well, and know that no matter which way you choose, probably everybody else is going to criticize you.
Okay, so 2 hopefully very quick answers.
Sorry.
Rapid fire. Nope, I appreciate that.
That was the long one. That was a big one.
These are hopefully a lot easier. One is if I've done everything I can to create a safe environment, employee still refuses to come in. Is that voluntary resignment? And if they do, are they allowed to collect, or are they eligible for any benefits such as health insurance?
So you can say your job is continuing and your schedule is this, and you need to report for work. And if they don't, then you can consider them to voluntarily resign. It might still be considered construct discharge because they were scared and you forced them and all of these things. But at the end of the day, can you fight their unemployment, and should you? Sure, why not? I'm seeing unemployment, probably about 10% of the claims that are out there right now, the unemployment agency is denying for various reasons. So it's not just a free-for-all, and they don't just get to collect. So you can certainly try it.
So one other that we're getting, for everything that you just talked about, does size of business matter? I have 10 employees, or I have 500 employees. Are there, and maybe that's a much bigger question we should have membership call you directly on, but is this pretty much across the board, even if I have a 10-person organization?
Yeah, size of business does matter, and there is some provisions within the Families First Act that allows smaller employers under 50 or less, and there's some basic requirements, some basic guidance and requirements that they can go through to determine, and it's pretty much a self-determination of whether or not they can do it, but they have to certify that it would cause that either that employee leaving or the funds necessary would cause a serious burden on the organization. But it is doable, and size does matter. Okay.
So I've got some related to employment issues. I'm going to ask Dan and probably Aaron and Marco to jump in on this. These are still employee related, and let me jump to the first one here. So, and anyone that can answer this, wonderful. So what happens if, the question is, what happens if the employee I want to hire back does not want to come back and remain on unemployment, and I bring on a different employee to take that spot? Or another way to say it is somebody, we have to terminate somebody, or they voluntarily resign, and I bring somebody else in to fill that slot. Will I lose some of my paycheck protection, debt forgiveness, if it's not the same employee coming back onto my payroll. And I think that the member's talking about head count. When we're looking at the full-time equivalent head count, is it literally head count, or the people that got laid off, I have to bring those exact employees back on?
My understanding is it's head count only. There's nothing specific to any one individual employee.
Yeah, I would agree with that.
And this is not, by the way, the debt forgiveness is not an all or nothing proposition. It's for, there's proportional debt forgiveness. So if you had 100 employees and 99 remain on payroll, it's not like you lose all the debt forgiveness. You'd have 99% of the debt potentially available for forgiveness if you met the rest of the criteria, which is spend the rest of the money by June 30th in essence.
Okay.
And can I add another
Yeah,
nuance
but
to this? One more nuance to this, where you have employees who don't want to return because they want to write out that the 4 months at 600 plus whatever. Keep in mind that either you furloughed them or you laid them off. You may have provided them with benefits during this interim period. And you've got to really have a discussion with them that the benefits are going to end at a time when there is a virus that's running rampant. And if you get this virus, you may need to be hospitalized. And the bills in an ICU are tremendous. So insurance is really, really important right now. And that's probably really, really going to stop for them. And COBRA is quite expensive. And so those are some of the things that employees don't think about. They think, well, they gave it to me, so I'm going to get insurance forever. No, they're really not. If they don't return, you're going to terminate them, and all the benefits associated with that get terminated. So for this short-term gain, they could, of cash, they could lose something very critical to themselves and their families, which is health insurance.
Sherry, what's the definition of temporary layoff or temporary furlough?
Yeah.
And does that enable them to remain on with insurance coverage? Is that that terminology has been thrown around a lot in the last 10 days?
Right, and some people use it a little bit more interchangeably. Furlough is typically looked at as a temporary adjustment in an individual's schedule. When you think of furloughs, a lot of times what you'll think about is like GM during the winter, you get 2 weeks off so they can retool, or that summer break so you can retool. So it's this temporary bridge. We don't need you right now for a couple of weeks. So we're going to have you be off. You can collect unemployment if you qualify, and we'll see you back in 3 or 4 weeks or so. That's typically considered a furlough. And then a layoff is considered a little bit more permanent. A lot of people might end an individual's benefits during a layoff because there is a potential right to recall or no right to recall. So layoff is usually considered a lot more permanent of a move in nature.
So the ability to remain on health insurance benefits, is that case-by-case basis based on the employer's coverage, group term coverage?
Yeah, so that's one of the things that you have to advise your employers is they really need to talk with their agents to determine what their coverage calls for. But there's some blanketed insurance carriers that have made really great decisions for employers right now, which pretty much said, we're not going to worry about layoff or furlough or leave of absence. Particularly like Blue Cross has said this across the board to every member. We're not going to worry about any of that. Employers, do what you feel you need to do during this time period. However, pay your premiums on time, and you'll be fine. And if they pull them off insurance, say for example, okay, you furloughed them or you laid them off, or you said, I'm going to keep your insurance for a short period of time, and then you realize this thing's going to go longer and you just can't afford to keep them on. If you re-employ or rehire them, Blue Cross specifically has said that they will waive any of the waiting periods. So if they've lost it. So you have to really look individually and talk to your carriers, and that's all insurances. Like you can't just consider simply health, dental, and life, the health and welfare, but you got to consider our health, dental, and optical. You have to consider life, short-term and long-term, and what are those implications? Because these people might very well need those insurances.
Okay, we're gonna stay just a minute. I'll ask for, maybe Aaron, Dan, or Marco to answer this. So the members are looking for a little bit more clarity on how loan forgiveness could be affected by furloughs, and if there's a way to maximize the loan forgiveness.
So again, the loan forgiveness is a function of the wages you're paying or payroll you're paying during that 8-week period. It doesn't matter whether they are on site working or working remotely. If you decide to continue to pay them on payroll, that's what matters. It's not what you call them or characterize their current employment situation.
So another way to say it is pay them. Pay, if you use the money, you get the debt forgiveness.
Yeah, I mean, look, let's be clear here. The policy behind the CARES Act and these PPP loans was to provide funding to businesses to make payroll and keep people working. And as long as you do that, that loan will be forgiven. If, on the other hand, you're going to use those funds for other things, like paying rent and utilities or interest on mortgage, and not maintain your workforce, it's then going to be simply a loan, and you'll have to pay it back.
Okay. So I'm gonna rapid fire through our other questions. I think we dealt with a lot of the heavy hitting ones. So I'm gonna rapid fire.
Can I stop you, Brian?
Yes.
Human side. I'm not done. Can I keep going?
Oh yeah, please.
Thank you. Because there's a couple of things that I really want us to consider, because I'm not finished with the human side of this. Again, we get off into the numbers, and we sometimes forget about the people. So what can you do as an employer? Okay, your employees need your leadership now way more than ever, and that's kind of very important. I know this is soft stuff and not what everybody's looking for, but sometimes it's what we need. Filing for unemployment. Has anybody done that lately? It's confusing. And so I want to take a look at the world of filing for an unemployment claim. It may sound like a silly thing, but it's very important to your employees. An employee gets laid off, and there's still employers that are going to continue to lay off, particularly as they do some math. In many cases, you might find that you got a 2 or 3 week period right now between now and your PPP loan origination, where you might be able to pull out some of your, depending on what your accountants and your attorneys and everybody says. When you do the math, you might say, okay, we got about 3 weeks. We can pull everybody off payroll right now. We can afford to do that and put them right back on. So you might find yourself in a position where you're going to say, I want to reduce my payroll immediately. And you might end up in a furlough situation or a layoff situation. Once an employee gets that pink slip, they're going to immediately want to apply because they want that money. They're nervous and they want that money. Well, the first thing that they're going to do is they're going to see that they can't immediately file, that they've got to do it by alphabet. And that can be very frustrating to an employee. So they don't understand that. They want that immediate gratification. Remember, paychecks now, daily paychecks. Now they've got to wait potentially several days to file. And then once they get online, this is what they see. It's not user-friendly. You don't even know what to do when you get to a page like this. You don't have a sign-in because you never filed for unemployment. Now where do you go? And in many cases, you sit on the screen for well over several seconds trying to figure out. It doesn't matter what you hit, you can't. It's hard to find out where to go from here. Okay, this is what your employees see. So some takeaways as an employer: have a layoff kit. It's important. Provide them with the tools that they need. Help them understand what days can they apply for it. and help them with all the tools. Because once they get on and they finally get in and they realize all the stuff that they need, the system's going to boot them out. Explain the process. Make certain that they understand. Here's how this is going to work. Provide them with tips. One healthy tip I'm going to give you is right when you finally figure out how to get past that first screen and you log on, the first thing it's going to say is, due to high volume, we cannot process your claim, come back another day. And you stop right there and you don't go further. What you can do is ignore that screen and go further. It lets you go. It doesn't stop you. Okay? So that's a helpful tip. Otherwise, the person's going to go there and go there and go there, and that's what they're always going to see, and they're going to stop. And then another thing that we do in this society, we click, click, click. We're fast clickers. So we get in there and we want to try to whip this out. As soon as you start clicking fast, the system knocks you out, and it says illegal operation, and it's a white screen. So again, you think you're done, you've been locked out. Simply hitting the arrow back key gets you right back to where you left off. People don't know that, and they'll get frustrated and they'll try for days and days to try to file a claim. And so these are just little tips that'll help your employees be much more successful with this, because what they're going to do is they're going to call you and they're going to want to know, how do I do this? I can't do it. I can't get in. Oh my gosh, I can't pay my rent. I need money. So you have to be prepared to help them through this. If you're going to lay people off, and if you have an employee that you've laid off and you've got a decent relationship, you might want to say, hey, let's file together on this day so that you yourself can experience what your employees are experiencing for the first time in their lives and are not going to enjoy. So it's quite helpful for you to actually see and understand this process that they're going to go through. And please do not guarantee that they will receive benefits. Again, we are not the deciders. And that's one of the things. It's okay, you'll get unemployment. You don't know that they will. It's okay, you can apply for unemployment. There's a big difference. So other ways that you can help, tangible supports. Help with food on the table. You know, we're all looking at ways that we can cut, but maybe that $25 electronic gift card will go a long way with employees. Assist with rent, or if you can't, help them to find ways that they can get rental assistance, deferrals, okay? And their employee assistance program, you probably have it. You've had it forever and you've paid for it. Now's the time for your employees to be able to use it. So get that information out to them. Who do they call for help with this? Most EAP programs have a financial assistance side to them. So make certain that your employees are utilizing that side of the policy. Employment supports. Give updates about the law, the job, the state of the state, what's going on. Coordinate working from home. Don't just say you're working from home, but coordinate it. How are we going to achieve this? What are we going to do? You know, what kind of things can we clean up while we're at home? You know, give them tips on how to access healthcare. I'm going to tell you, if you've had to access healthcare right now, and you go to the telehealth, which is what you hear on the TV all the time, telehealth, the lines for telehealth are 20 patients to 30 patients back. You will never, ever see a doctor on telehealth if you're number 22 in line. I guarantee you. And so find out tips, work with them on that. Believe it or not, almost every healthcare provider has their own. So if you have your own doctor, almost every one of them now has an after hours access and telehealth, and during normal business hours telehealth, because they don't want you going into that group telehealth. A, they need the money themselves. They're broke too. And B, you'll get better care that way. Obtain information from your insurance carriers. Again, Blue Cross has every week, they're putting something new out that they're going to provide their members in light of this. And provide one-on-one appointments if needed. You know, be there for your employees. You know, they used to be able to say, hey, you got a minute, and sit down, and you'd walk them through either stuff from their home life or stuff from their work life or a combination of both. They miss that now and they need it more than ever. So make certain that you're doing that. From social supports, be available. And when you are available, be upbeat and happy. Nothing drives a person down faster than you being on the call, yawning, looking at everything else, saying that this sucks and I hate it. It'll drag them down so very fast, and it's critical. You do set the tone for your employees, even if it's in their own homes. So it's important to remember that. Help to keep the kids occupied. I know that sounds funny. You're like, hey, wait a minute, I'm no babysitter. But there are ways, and what I would encourage you to do is you've got an entire workforce out there that probably is only working at about 30% capacity, maybe even 25% in many cases, because you're finding things for them to do. You're giving them work from home stuff. Is give them tasks. You can assign one to say, find everything you can about how to access healthcare and do it well. The next one, I want you to find and design ways to keep these kids busy throughout half the day. What are you going to do? You know, parents can, you know, you can run a Zoom meeting with 12 kids and they can do a scavenger hunt. They could do all these other things. And it all be, you know, the employer's kids. You know, it could be a meet the dog day where everybody gets to show, every kid gets to show off their dog and what do they do, what kind of tricks, I don't care, whatever it is. It can be silly, it can be fun, it can be educational. Sponsor a family night, you know, we've talked about that, the cocktail hour. You might do a Netflix night, I don't know. Zoom meet frequently, very frequent meetings. Minimally weekly, daily if you can. My team meets 2 times to 3 times per day. Set up support groups, moms at home, dads at home. Happy hour, recipe exchange, be creative. Find out new things, new ways to engage your employees during this, because engagement is important here now as much as it is when you had a full workload in a workplace and you were worried about turnover. How we address our employees right now will impact business for decades. I can help you with that. Sage Solution is there to help. If you have questions, of course, I'll be on the rest of this to answer any questions you have, and we are just a phone call away to support you through this process.
Thank you, Sherry. That was awesome.
Sorry, I had to get the human side in a little bit more.
No, that was awesome. I'm hoping you can provide your slides to Anna in case she has any members that ask for a copy of what you just presented. I think there's some really great content on there.
Brian, I do have them, and Sherry has given us permission to actually, I'm going to send them to our entire membership, and it really was awesome, Sherry.
Okay, so now we're going to go into the rapid fire. Like I said, I think most of the hard hitting, except for one, most of the hard hitting questions we've answered. So here we go. This is as it relates to the application itself. The field for employees on the application, is that for full-time and part-time or just full-time? My understanding is that would be for full and part-time. Panel, what do you think?
Really?
I'm going to go with full. Yeah, I'm going to go with full-time too. My guess is that when you go to apply for forgiveness, that they're going to use that number as your starting point, as your start of measuring point to make sure you're paying that many people in the 2-month, the 8-week covered period.
Yeah, I don't have the application in front of me, but the statute itself speaks in terms of full-time equivalents, you know, based on a 30-hour work week.
Yep.
So
Yeah.
you still count the part-time, you know, figuring out how much they would be if, you know, as a percentage of based on the 30 hours a week.
Okay. And
can I give you a helpful hint on that real quick? If it's based on a 30-hour equivalent, then your Affordable Care Act, your monthly numbers, when you do the Affordable Care Act report, that's what you can ask your HR people to look at, because that's going to give you those equivalents really easily, because they base it on the same.
okay. When you are able to apply for unemployment, let me see here. It says when you're able to apply for unemployment, how grants, like the Oakland County grants, I'm rereading the question's a little confusing. I'm gonna skip that one and ask my partner Matt if he can change that question. I'm not sure, Matt, what that one is alluding to. So let me skip to the next one. We'll come back to it. If you are awarded grants of other funds from state or local programs like Washtenaw County Small Business, I think we're aware that Macomb and Oakland County are also doing grants. Does this affect your SBA award amount? And I believe they're talking about the SBA grant under EIDL. So the question is, if we get a different grant, does it impact EIDL?
I don't think it impacts PPP either. I think that is a separate. Dan, do you think that's correct? I think they're separate. The state funds and the state funds are separate to the SBA funds and not an adjustment to your calculation. It's still straight direct off of the payroll.
I haven't seen anything in the act that references the receipt of state or local grants affecting this federal benefit.
And my understanding with the state grants, and they are not tied directly to payroll, so I think they'd be almost mutually exclusive.
Okay. Then here's a quick one. A couple large banks as of this afternoon were saying that they are not ready yet, and the member asked, is this consistent? I think we addressed that earlier. Then yeah, that's pretty consistent. Some of the larger banks were not ready yet today.
Yeah, and it's funny. I just literally pulled a link that said they suggested that they underwrote by midday $6 billion of applications, and these are queued transactions. None of them are applications. These are people they've taken the names of people that are going to request this amount.
Okay. I think, Joe, you addressed this earlier, but I'm going to throw it out there again. My credit union is not assisting me, and I have a small loan and account with a big bank. I've inquired about these. Is there an alternative? So should this member continue?
Go to the big bank.
Go to the big bank?
So go to the bank. As long as you have a commercial relationship with the bank, they will service that.
Okay. A member asks, has anyone seen Addendum A yet? And what happens if you have more than one business? We addressed, I believe, the first one. If you have more than one business with payroll in those businesses, you should be filing separate applications. Or if you have a common paymaster or you're using a PEO, and you would file for each business. And then I have not seen Addendum A. Dan, have you seen Addendum A?
No, I believe Addendum A is something you're supposed to create yourself. It relates directly to the question number 3, as if the owner or the applicant has common ownership with other entities. Okay. So they're common ownership or common management. So what I believe they're looking for there is a list of companies that are somehow affiliated, either through common ownership or subsidiary, parent subsidiary type relationships. I've been telling my clients to list all the related parties by name, add their federal ID number, and put a general description of what the business does. I would say probably 99% of our employers have an operating business and have a related party limited liability company, let's say, that they rent from. I would disclose that as a rental real estate, entity. Some may have an employee leasing company or other businesses through common ownership. I think that's a question to try to get at the 500 employee max, quite honestly.
Yeah, I think that's right. That question goes to whether you're eligible as a small business with under 500 employees. And I think the Addendum A not only has to include those businesses you have common ownership with or controlled ownership, but there also is a provision in in the regulations that talks about facts and circumstances and whether or not you have control over management. So I think you have to also be careful and possibly include those entities which you may control the board and have a minority ownership, or control with LLCs the board of managers.
Okay.
But I don't think there is a addendum A anywhere out there to access. I believe you have to create that yourself.
Okay. Next question. If employees are not hired back to work, then do we get assessed the 1% interest rate? And if that's the case, then wouldn't we still apply? I think we answered that as well, that the intent is to hire people back and take them off unemployment. And so if you don't hire back and there's formulas, then you could be assessed the 1% interest and have it as a loan rather than forgiven debt. And then I think if that's the case, wouldn't we still apply? I can give my blanket suggestion that I have put out there. Ask for the money. Get the money in. We don't know what's going to happen in the next 30 days, 60 days. So get the money in and figure out what to do with it later. Figure out how to maximize the debt forgiveness, possibly look at the payroll credit. Dan, Aaron,
Yep.
what else would you
Yeah,
add
Brian,
to that?
Brian, I would agree with you 110%. Apply and get the money. What'll be interesting, however, is if there is a partial forgiveness, how they're going to actually calculate the interest rate on the amount of the balance that's due, that's not forgiven. There'll have to be some guidance on that, and there may be some planning opportunities, during that 8-week period with how you make payroll and whether or not you hire certain employees, depending upon how they may calculate that interest owed on what principal balance.
Yeah, one of the things we didn't really mention yet is that the interest does start to accrue on this loan when you get it, even though there is a 6-month moratorium on any payments. So anything that's not forgiven, in essence, after the 6 months, or I believe it's actually a December 31st due date is where you have to make the application to be forgiven. I believe you have to pay the back accrued interest on that, which again, at it was originally, the SBA originally posted as accruing at 0.5%. Then the latest version I saw this morning was 1% for 2 years. However, the actual act out of Congress says it will be converted to a loan with a max amortization period of 10 years at 4%. So I'm guessing that's kind of the max, and they're letting the SBA have some latitude in calculating something other than that, but within those parameters. Joe, is that your understanding?
It is, and I would agree with that. I think it would not surprise me to see something that comes out that gives the change that would waive the interest if it's paid at the if the loan is paid. So if you didn't use all the funds, but you reserved it and you held it, and you got to a year from now and you paid it back at the time, it would not surprise me to see that something comes out that interest is foregone at that point rather than accruing from day one.
Okay.
However, today it states that it'll accrue, it's deferred for 6 months and it'll accrue if the funds aren't used.
Okay. Then...
Joe, just a question for Joe. I heard that the reason the rate went from 5% to 1% was that banks were pushing back because at a 5% rate, the banks, considering their cost of funds, the loans weren't working out economically for the banks, and that they're still even pushing back at a 1% interest rate. Are you hearing anything that may be increased even more?
I haven't, but I just saw that there was in the current guidance, there was something that referenced why the rates were moved. At 0.5%, yeah, I mean, that is if you're talking current rate, cost of funds, there's no cost of funds, no cost of funds on this. I mean, it's federal money anyway. So I'm not sure the rationale, but that would make sense that if we're actually going to carry it and we ultimately end up with it converting to a loan, we have a year from now, we'll have a note, which is in theory underwater. It would make sense, but I've not seen that. But there is in the final, I believe in what is out on the Treasury's final guidance note here, the one that's out for public commentary is, I think it's referenced in there. At least I just saw a note that there's a reference in there. I haven't read it yet.
Okay. Sherry, this is hopefully a quick question. My spouse has a W-2 and a 1099. She has not lost her W-2 job, but she did lose her 1099 income, which was the higher of the two sources. Is she allowed to get and apply for unemployment for her 1099 income, even though she still is drawing a W-2?
That one I haven't seen specific guidance for. It would be classified as, I could see it as underemployment, which I would recommend that she give it a shot.
Okay.
And because it's the bigger the two, she, hopefully may qualify.
Okay. Next, if I've got an employee making over 100,000, but has only been employed with me since June of 19, or what if an employee's been making over 100,000 and has only been employed since June of 19? I believe that it's not going to matter. They're going to look at it almost like an annualized. They would look at an annualized number, I would think, and they would still be limited.
Yeah, exactly. It's on an annualized basis.
Okay.
I'm wondering if the question relates to, though, the measurement of the amount a loan available. If the employee's 12-month look back is under 100,000, are you then being in effect cheated off of, the full 100 grand allocation, right? Because they'll only be in there 6 months into the calculation. Let's say somebody worked is on a salary for 100 grand, but didn't start till June. When you do the 12-month look back, they may only, you only may get $50,000 into the formula.
Yeah. I don't know the answer to that one. Joe, Aaron, or Marco, have you run across that yet?
No, I think because the exclusion's on an annualized basis, but I'm not sure. I think you're right that you would take the income, the payroll over the whole year and take the average of that.
I tend to think I tend to think if that's the case, they'd be penalized.
Yeah.
All right.
Yeah, I do not know that. That's a good question. I do not know that.
So then the member says, if you're a seasonal employer, do we calculate our 12 months differently? And the answer to that one is yes. There is documentation on a different period on how you calculate. And I think there's no ambiguity on that. And the member can probably readily find that one. Then we say, there's a member that says, my bank claims we need to have a debt instrument beyond our checking account. And then I believe we addressed that one. Each bank is treating things differently under their own policies and procedures, and you should work with your bank.
But it also, in that regard, it sounds like they're treating that they're addressing the credit clients first, and then they will address their non-borrowing clients second. And I don't know this, but my guess would be the rationale is that in the event of a borrowing client has bigger potential impact to the balance sheet of the bank if they are having their credit falling apart down the road. So that's the reason that I would think that they would have to be addressing the balance sheet and and having to reserve against those accounts if those suddenly become troubled debts. So that's the reason that I'm guessing that they are addressing that first. But I just read a note that said they are addressing the credit needs, one of the bigger banks, who said they are addressing the credit clients with a credit and depository account first.
Okay. A member asked about where they could apply for the EDIL. So the answer to that is sba.gov. So that's sba.gov.
Yep.
And a member asked if you have employees that you've laid off, but you're going to use the money to bring them back, that's okay. So, yep, if you bring them back, you can use that money and it would be eligible for the debt forgiveness. And then the same member said, well, what if you try to hire them back and they went and found another job elsewhere? And I tend to think that the federal government, their intent is to restore your workforce, and you would be penalized if you don't bring back another full-time equivalent to replace the person that has found another job. Dan, Aaron, or Marco, what are your thoughts on that?
Yeah, that doesn't
You mean
really.
assuming you've used all the funds?
If you've used all the funds, or you're using your funds, you try to bring people off of unemployment, come back to work, and they found a job elsewhere, and now you have an open spot. So maybe I had 49 full-time equivalents going in, and now I have 50, and now I only have 49. And under the reduction formula, I can get penalized because I tried to bring them back, but they found another job.
Yeah, I think you would.
I think
Because
that's right.
really
Yeah.
based on your own numbers, it doesn't matter, where that one ends up.
Yeah, I agree.
But interesting, if you're going to be, if the banks are going to be using the 2019 payroll instead of the rolling 12 months from the date of the loan, that may work, that may not be a negative, for this particular employer, because they'll be able to use the higher amount from the prior period towards the loan amount.
Brian,
Okay.
real quick, before we get too far away from that seasonal employer question, just in case the person that asked it is still on. In the case of a seasonal employer, the average totally monthly payments for payroll shall be for the 12-week period beginning February 15th of 2019, or at the election of the eligible recipient, March 1st of 19, and ending June 30th of 19. So trying to get a measure of the similar period in the previous year as you're measuring now. And if your business was not in business in 19, you can look at January and February of 2020 to establish your average monthly payroll.
Okay, thank you.
I hope that clears that up.
Thank
Could I
you.
also make note, I think that somebody a few minutes ago had a question. It's somebody who's an employee whose principal residence is outside of the US, and what that does to the compensation, that's explicitly excluded. So that compensation would be excluded.
Got to throw that out of the calculation, yep.
Out of the borrowing base, yep.
Okay. I had a few employees take voluntary leave, and I laid off 3 employees due to not being able to work at, do work at home. I've kept a majority of my staff. Would I still qualify for the PPP? And I think the stock answer is you would still qualify for the PPP. However, unless you bring those employees back onto payroll, you may not qualify for debt forgiveness.
For all the
Yeah,
debt forgiveness.
Okay.
I think the only preclusion from being eligible for the PPP loan are either you're over the employee limitation of 500 employees for certain exceptions, and then you're unable to answer no to all of the certification questions that are asked on the application, which would include what's the type of business you're engaged in. Do you anticipate suffering an economic hardship? Are you currently involved in a bankruptcy proceeding? So those situations would also preclude you from participating, as well as the eligibility requirements, but otherwise, you know, anyone and everyone should apply.
Okay. All right. Now, hopefully this is quick, but maybe not. And if not, maybe we can have the member talk directly with Sherry. But what's the primary difference between a furlough and a layoff?
I think we just covered that, right? The
Okay.
primary difference is a furlough is temporary in nature. Think of it as the, you know, redoing the line at GM or Ford during the holidays. And then a layoff is more permanent in nature, subject to the potential of recall if there are positions available. So you would typically end insurance at a layoff and consider that more permanent unless you're able to bring them back. A furlough, consider it temporary, try to maintain insurance and benefits, check with your agent.
Okay, thank you. Last one, and this is one we've been talking about a lot, so we're probably just have to keep it brief because there may be no concrete answer right now. But for the purposes of the Paycheck Protection Program and the payroll costs formulas, as well as the formula or the use of money, do I get to include payments to my 1099 independent contractors in my employment costs? And then if I pay them during the 8-week period after receiving the loan, does that count for forgiveness?
Well, I'm reading the guidance right now in number H, and it says, do independent contractors count as employees for purposes of PP loan calculations? And the answer here indicates no. Independent contractors have the ability to apply for a PP loan on their own, so they do not count for purposes of a borrower's PPP loan calc. So again,
Yeah,
I think
Joe,
that's going
I'm
to be
looking at that
subject
same
to a
alert.
conference.
Yeah, what
So I
is
think
that
that's gonna-
guidance?
Here, this is I think the final. Let's see, SBA business loan temporary changes payback protection agency. I'll send this to you, Dan.
Yeah, that's the regulations from last night.
Is it called the interim ruling? Does it say interim ruling or something? Interim final?
Interim final, you got it. Yep.
Yeah, I had some of my partners and I took a pretty deep dive into that this morning, and we found a lot of inaccuracies in that document as compared to the law.
Well, I think this was raced out overnight to say that you need final guidance. I think there's going to be some additional final guidance, because this is, of course, this is set for public comment. This is for it to be the final.
Yeah,
it's going to have to be the so it'll have to have public comment, and I would guess this will not end up without some additional guidance on this, but that right there and there indicates that it would say no. But
I'm happy to give my 2 cents, and my 2 cents is that they would count 1099 recipients who are doing the work of employees would be counted in my opinion, would be included in payroll costs, capped at 100 grand. I've heard some bankers say it's a double dip. I don't necessarily agree with that, because most 1099 employees are set up as sole proprietors. That's true, but many of them are only able to claim their PPP loan on the net amount of their earnings from self-employment, and they may very well have their own employees, independent contractors that they pay, rent, and all the other accoutrement that goes along with a small single solely owned business. So again, ultimately, I think it will come down to the banks. The bank that you particularly work with that's going to be the loan. But my reading of the law is that there's one set of payroll costs that apply to employees, W-2 employees, and then you add to that 1099 contractors.
Yeah, and I think Dan is right. I think the guidance that the banks are going to have is there. It does not appear at this moment that there is a formula that has been given and said A plus B is going to equal this C number and do not deviate from it. So, and the clients are having their CPAs complete this and spit a number into it, and they're going to submit it and vet it out. I think in the end, it will probably come off, Dan, that there's going to be some sort of determination on that, and they're going to have to say that it's going to be A, B, D, and C, and it'll actually likely be fought out next year at when this matures 12 months from now, and then after that for tax time.
Okay. One thing that I think we could all agree on, though, is that 1099s for items like paying your attorney or your CPA, or maybe a plumber that came in that was not part of an organization, those would clearly be out. So the only 1099s I'd be considering would be ones 1099 MISC that I paid because maybe I'm a owner of a healthcare office and I paid my associates with a 1099, or potentially a real estate firm that pays their agents as a 1099. I think that's the question there. All the other ones, I think we can agree would not be appropriate to put them in your payroll.
Maybe a good rule of thumb for now is any 1099 where you're including the amount in the non-employee compensation box.
Yeah. So let me ask for Marco, Aaron, Joe, and Dan. Do you guys see any harm in putting it in the calculation, getting the money, letting the dust settle, and figure out later if you get forgiveness or not? Is there enough ambiguity here where we could file applications, in good faith that we believe that the 1099 contractors should be included in our payroll costs? What are your thoughts on that?
I think these being submitted and calculated in good faith and calculated not for the fact of, I do not think there is risk to coming back with a huge penalty on it. I think the worst thing you're going to see is if you had those funds and use those funds, you're going to have 1% interest on that accrues. If they're thrown out, there may be a penalty that gets thrown out in the back. But to me, it seems to me, and again, I'm not writing the documents on this, but it sure seems to me that it's rational to include those costs.
Yeah, I would advise clients to include it, but making the distinction between 1099 payments that are akin to wages versus ones that aren't.
Right. Yep.
Okay. All right. I think with that, I greatly appreciate the members and all of your staff that are on the phone. We felt, EO Detroit felt that this was a really, really critical topic, required a lot of time to dive into it. I want to thank the panel, Dan, Aaron, Marco, Sherry, Joseph. I'd like to thank my partner, Matt, who has also helped with this behind the scenes and helped our panelists pull together the presentation on the PPP. I want to thank Anna for also working the technology and getting us all set up and herding the cats together. And I think again, thank you to everybody. One final thought, Marco?
Yeah. Oh, I'm sorry, you're looking for a final thought?
Any final thoughts?
I think, we focused on the PPP loans, but if it's, persons that business isn't eligible, There's also those tax benefits that we talked about. Or kind of run through the retention credit and the deferral payments.
Okay. Dan, final thought?
I think it's time for a bourbon and a cigar. Let's go out and enjoy this nice spring evening, practicing proper social distancing. Thank you all for your time, and I look forward. Let's get together next Wednesday.
Sitting on Churchill's front steps, 8 feet apart.
There you go.
Aaron, final thought?
Yeah, it's a work in progress. The banks are trying to figure it out. The government's trying to figure it out. Business owners are trying to figure it out. I think in the meantime, work with the application that's out there, get your ducks in a row, get that addendum A completed, get your payroll records, and, just be ready to roll as soon as, the applications come out and can be submitted.
Okay. Sherry, final thought?
Yeah.
Sure. When the dust settles, remember your employees.
Great. And Joe, final thought?
Yeah, I would say that it's probably worthwhile to make sure that you have the weekend to work your numbers out, because I think everyone's going to have the kinks out of this. If this is the final or what looks like it's going to be the final guidance on this, the floodgates are going to open on this, and you do want to, I don't think there's going to be a wave B, wave C with this. I think this is just going to be, there's going to be a wave 1, and that everyone's just going to continue to be, even though this will go out through June 30th, I think it's probably going to be better to be in early rather than later, even though we do believe there are going to be funds to go around. If you're about ready, I would get get in contact with your bank early next week.
Okay. And my final thought is I just feel a lot of gratitude for the panel, for all the hours that we spent on the phone and the time preparing. I feel gratitude to our members in collaborating, providing insight, asking questions. I think it's all the questions that the members are asking, that the SAPs are fielding, that is strengthening us as an organization, because these are great questions. I'd encourage the membership to reach out to our partners if they need help with anything, and reach out also to Joe's team, now and in the future. And we thank Joe for joining us. And I just hope everybody has a great weekend. Spend time with your families, be healthy, and let's just get it done.
Thanks, Brian.
You're welcome.
Thanks, guys.
Thank you, everyone.
Thanks, everybody.
Thank you,
appreciate it.
everybody.
Thank you.
And yeah, I just, Brian likes to fly under the radar, but I just have to, give him all the credit for really bringing this to the forefront and helping us understand how important this was for our members. Again, he said gratitude, grateful for all of you for taking this time. And yeah, Brian, you especially, go get something to eat and spend time with your family and try to sleep. And again, reach out to me. I plan to have this recording embedded and then sent out to everybody, and along with all of your contact information. And again, we'd like to make this, we'd like to do something next week. Again, it doesn't have to be the same panelists necessarily, but we're going to try to come up with some sort of programming. Sherry, I loved what you touched upon, and maybe dive deeper into it, and maybe ask some of our other strategic alliance partners to weigh in as well. But thank you so much for your time, and please stay safe and healthy.
And thank you, Anna.
Bye.
Thank you.
Good afternoon, everybody.
Have a great weekend, everyone.
Bye-bye.
Take care.
Enjoy sunshine. Thanks, Sherry.
No problem. Bye-bye.
Bye. Bye, Joe.
Bye-bye. There I go. Oh, there, Lee.